Bloomberg Audio Studios. Podcasts, radio, news.
We welcome our TV and radio audiences worldwide. The US government has begun distributing economic data on public blockchains, marking the latest Trump administration endorsement of the crypto industry. Now, the move creates another avenue for publishing the GDP data, according to the Commerce Department officials. We're here to discuss really the regulatory changes affecting the crypto industry after the crackdown of the Biden years is SEC Commissioner Mark Uyeda. We welcome you to radio and TV. And just recently, Project Crypto was launched, and this really sort of endorses the initiative to modernize regulation to make it fit for purpose for current innovations within decentralized finance. Are we getting enough clarity? How quickly might we know what tokens are securities, for example?
We have a lot of ground to catch up. The last 4 years in the Biden administration, we saw a lot of efforts to suppress crypto, at least in the United States. That was one of the things that the president did. I think it was the third day of his administration, January 23rd, when he issued that executive order with a clear goal. We need to make the United States one of the global leaders in innovation in crypto and digital assets. That was why, one of the things I did immediately upon becoming the acting chairman was to name one of my fellow commissioners, Hester Peirce, who spent an awful lot of time talking to the crypto community. You're going to be in charge of our efforts, leader of our crypto task force, and that now under our new chairman, Paul Atkins, has now pivoted into what we call Project Crypto. We are working side by side with our colleagues at the CFTC. They announced what they call Crypto Sprint. So we're really anxious to get some things done.
In terms of getting things done, there is a sort of fever pitch of innovation going on, and a lot of that is to do with perhaps adoption of new ETFs around things. I'm interested in, for companies, so-called treasury companies that are building up crypto as their assets, or indeed new ETFs springing up. Are you comfortable with the pace of innovation as it is? Are we going at as fast or too fast from your perspective?
Well, they are part of the innovation equation, so to speak, but they're just only a part of it. We've got a lot more to do. With these companies, the SEC, in its 90 years of existence, has always been a disclosure-oriented regulator. That means we're not supposed to put our thumb on the scale of whether an investment is good or bad. What our concern is whether or not you're telling the truth when you market and provide the disclosures with respect to these products. So they can put crypto in their treasury. They need to disclose that. They need to disclose the risks about that. They need to disclose what their intentions are in accordance with our rules and regulations. But there's so much more that we need to do. Well,
important for those companies that are looking to be treasury companies, or those that want to put Solana, for example, or XRP, or even Dogecoin in an ETF. How soon will they know whether those tokens are indeed deemed securities or not?
Well, we've already put out a number of statements from our staff in the Division of Corporation Finance, which says some things are not securities. Now, we are working on, as Chairman Atkins said, as part of his Project Crypto kickoff, to provide some commission-level guidance, what is and is not a security when it comes to crypto. It is tied up in a decades-old Supreme Court decision called Howey, SEC versus Howey, as to whether or not somebody's an investment contract. The good news is that it is what I view as a principles-based test. Is it an investment of money in a common enterprise with the expectation of profits from the efforts of others? How do you apply that in the crypto space? That's what we're looking to do.
In the next month?
Can't talk about timing, but what I can say is this has been part of the Crypto Task Force's efforts from day one of this year. We took a position which I objected to. I put out many dissents objecting to it with this idea that every crypto, with the exception of Bitcoin, which is what our former chairman Gary Gensler testified before Congress, was a security. No, we have this whole framework. We weren't applying it properly. We said, we're going to do this. That was what the Crypto Task Force started doing. That's why they held this series of roundtables. In fact, that was the very first roundtable, was talking about what ought to be in and outside the scope of this.
We're speaking with Mark Uyeda, Commissioner for the United States Securities and Exchange Commission. I'm interested in, previously, it was sort of regulation by enforcement, and you said you don't want to put your thumb on the scale in this way. But how many crypto enforcements are ongoing at the moment? Can you tell us in terms of the amount of investigation still going? I know that, for example, Unicoin is being sued, for example, and that happened in May.
We have a number of ongoing investigations and actions related that I would say are crypto or crypto-related. We have an awful lot of what one might call fake crypto, which is somebody who purports to be involved in crypto, but it is nothing more than the types of Ponzi schemes and other scams that we have seen since probably the creation of currency.
How many staffers are looking at enforcement now compared to the prior 4 years?
Well, what we've done is we still have a unit, although we've changed it from the cyber and crypto unit to be more broadly focused on technology. We have an enormous number of tips, complaints, and referrals that come into the agency every year. In fact, I think we're on track for nearly 45,000. A number of them relate to crypto, so we deploy staff appropriately.
And you said you're working in lockstep almost with the CFTC. How is that relationship going at the moment?
We've got a great relationship, and it's one of the things that was very important on the financial regulatory front, not only between us and the CFTC, but us with Treasury and the banking regulators about how to address crypto. You saw this with the President's working group on digital assets. They issued the report last month. This has been something that has been, I think, really all of the relevant regulators in the executive branch are all communicating with each other and all coordinating with each other to make sure that we can make this effort successful.
Now, the SEC does more than just look at crypto. And I'm interested in, at the moment, you're currently suing Elon Musk, and that's to do with alleged violation of securities law about when he was taking a significant chunk in Twitter. He had owned about 5% in excess of, and he was meant to make that declaration. Many would say he didn't do it quickly enough. He wants that suit dropped. Should it be dropped?
Well, I'm not going to comment on any particular investigation or enforcement action that we currently have. But what I will say is, we have these Schedule 13D and 13G requirements out there. One of the key parts about whether or not you can file on a 13G is whether or not you are a passive investor. And one of the things that we did take action is there were a large number of very influential asset managers that hold significant chunks, well above 5% of a company's stock. The question is, what sort of relationship should they be having that requires additional disclosure? If they're asking or directing the company that says, you need to do the following things, for instance, on climate change, you need to hit net zero goals, you need to have a plan of how you get to net zero, you're no longer a passive investor. That requires additional disclosures of some form, because we have concerns whenever or at least I should say Congress passed laws telling that when you have really large shareholders, more than 5%, which perhaps doesn't sound a lot, but in the real world, that is quite a bit for a company, that they need to provide the appropriate levels of transparencies of their discussions with company management.
Well, plenty more on your agenda other than just the Elon case and indeed just crypto. It's been wonderful having some time with you. We'll let you get back to the day job. Mark Uyeda, of course, Commissioner for the United States Securities and Exchange Commission, the SEC.